I'm going to show you guys today the exact strategy that I use to make enough profit on this account that you see here to pay for my monthly expenses. So basically a full-time income off of trading profits on this account. I don't live a lavish lifestyle. I don't own an expensive multi-million dollar house. I don't own an exotic sports car. I don't have expensive toys, but I live comfortably and it makes me happy. So I want to produce enough profit to pay for my comfortable lifestyle using my trading accounts. So I have 70,000 in my trading algorithms and 33,000 in my manual trading account, which is what you're looking at here. And I need to produce just $5,000 a month to pay for my living expenses. I'm capable of doing it on this account because I'm producing almost 14% profit right now. This manual trading account has been an interesting experiment for me. I've been wanting to compare algo trading versus manual trading to see which one produces more profit. So algos can only make sense of the technical side of trading, which is the indicators, support and resistance, and so on. But they can't really make sense or trade fundamental data very well, which is the news, scheduled news, unscheduled news. It puts them a bit at a disadvantage. It doesn't mean that they can't make a consistent profit, but it means that they are capped on how much profit they can produce over the long term. So manual trading, I'm at more of an advantage here. If I'm a good trader and I can control those emotions, I could potentially produce a lot more profit. So that's what's been happening on this account over the last 9 months with my average of 14%. So I'm going to show you guys the exact strategy that I've used to produce a profit of almost 14,000 in about 9 months. So I started with 10 grand in this account back in October of 2024 and grew that to around 20,000, and I just deposited another 10K into the account to make it around 33,000. So my average profit of around 14% each month is enough to pay my 5,000 a month expenses and lifestyle bills. All right, so this is my manual trading account with $33,300 in it, and this is the XAU USD pair. So this is gold, and gold has had a long bias or a bias of increasing value over the last many years. So when there's instability in the US or across the world, gold is likely increasing in value. So all these blue arrows are buy positions that I'm taking. So I'm looking for gold to have a pullback, so USD strength to come in and cause gold to go down, and then looking for gold to bounce back up with the trend at specific support and resistance levels. So resistance is the ceiling, support is the floor. All right. So here we have a daily chart. So I draw all of my support and resistance levels first on the daily, and then I go to the H4. And it's really quite simple of how I do this. So I'm going to pick the highest point and the lowest point. So the highest point on the chart, and I'm just going to do this for the last few months. All right, so the highest point is right here at the top. All right, so we have this group of candles right here and this group of candles. All right, so they look like they pretty much used the same level of support and resistance to have a rejection at. And so what I'm looking at is the close of this high candle and the body of the close and the open of the next candle. And they basically make a really clear level. So I'm going to mark that right there. And that is the highest point. Now, the body of the candles are much more important than the actual high of the candle itself. Now, price in here still has some importance, but this is where the action is going to be. And I've learned this over the last 20 years, that support and resistance is most important around the open and the close of the candle. And you'll see that basically a ceiling or like a floor will be shown based on the open and the close of certain candles, especially in the daily chart. All right, so we can see that price went down, came back up, and hit that same level. Now, it wasn't as clean as it was when we first drew it, but we do see that rejection taking place at that same level. So this could be a potential selling opportunity if gold didn't have a long bias. So I definitely did not sell gold at that point. So I want to now mark the lowest point of the chart right down here, and I'm going to have the same rules where the close of the lowest candle and the open of the next candle. And so I'm not going to take into consideration the wicks or the low or the high of that actual candle. Okay, so now we're going to just start marking the levels of support and resistance, making our way from the beginning of the chart, so July 24th, and going all the way to the current date. All right. So next we're going to find the next major level of support and resistance, and we can see a small one right here. So support, resistance, comes back down, and almost taps that same support level again. This actually low of this candle did. And then the bodies of the candle actually found support a little bit higher, making a higher low. A bit of like a staircase situation where we have the staircase here, comes back up, and we're just climbing up, right, at that point. So that is, we're going to mark the support, the resistance, and we're going to mark the next resistance level there. Support, resistance, and the reason why, and then you can see here that we're not seeing any more support or resistance levels. This level is a little bit too small. We can mark every single little one, but we're looking for major levels of support and resistance that banks and institutions are going to be seeing and watching. Because if it's not obvious, they're not going to take the position. And this is how a lot of retail traders get stuck, is because they start to see things that are just not there. So it's important to look at your support and resistance levels and decide, is this a major level? And to me, it's maybe not clear enough. And it becomes more clear later on when we see a much bigger dip. So we're looking for basically mountains, like ranges. So a peak there and it comes back down. That is a substantial pullback after a substantial move on the upside. And the same thing here, where it pushes back up and makes a new high, breaks the previous, and then comes back down to a new support level. So that is a big reaction and a big move. All right, so we're going to continue marking our support and resistance. All right, so this is a much bigger level because we have a more substantial move from this point to this point. Instead of looking at this point to this point, it's really quite small. It's only like two candles. The reason why I marked this one that's smaller is because there's a lot of action going on in that area where we have price bouncing to this point, coming back down, went back up again, it went into a range. And this is showing, even though it's tighter, it's showing that there's more of a reaction that we should be watching for in this area. Okay, this one was too small and only happened once. All right, so right here, comes back up, breaks the level right there, makes a new high at the top. Okay, next we come back down, and since we marked this one right there, there was a small reaction at this point right here, but it didn't do much. It actually failed and fell through. And what happens? We come back to this same level at this point. All right, so price comes back down, breaks this level of support, and makes a new low. And what's interesting is that it actually is the one that we ignored previously. It actually used it as a rejection. So this is a much more obvious point and much more usable as well. So price pushes back up, and now you're going to start to see, because we have all the support and resistance in this area, all the way up until this point right here. So we've marked all the support and resistance to that point. So now we get to see, since price is within that range, and it's within the range of our high points and our low point of marked support and resistance, and now we get to see how price reacts to it. So price pushes up and has a sloppy rejection at this previous point right here, comes back down, uses this level as a support, bounces off of it, comes back up, breaks it again, and has another sloppy support and resistance level. So is this a rejection at the 2673 level right here and here? Or is there a new level that is being put down, maybe right there? And that's something that we can consider. So I'm going to mark it for now and see what happens and see how price reacts to it in the future. All right, so price comes back down, uses this level again as a support level, bounces off of it, and continues back up. We retest this 2714 level that's in question, and what happens? It pretty much fails. Not much of a reaction at that level this time around, and continues up. So this is why I don't like selling the market, because the selling has limited reaction, especially when gold has been on the rise so heavily. We have limited reaction here, which is a more substantial move on gold. And so you have to be really careful not to enter buy trade right near the top. So this is the very top, and we have a pullback. Some traders might be, oh, this is the first opportunity for a potential buy entry, or even down here. And I would be really careful, wait for deeper pullbacks, maybe to this level, for example, entry right here. So this would be trade 1, and then trade 2, potentially at this level. And if you didn't have a trade there, then we still have our trade 1 and we still get that reaction later on. We just have to have that patience, okay? All right, so now we're going to see how price reacts. And you can see that in this area, we have our support and resistance that are tighter together. They're closer together. But remember, this is on the daily chart, so it's going to make a lot more sense when we go down to the lower time frames. Okay, so next, price pushes up and finds a new level of support and resistance. Now we have some small reactions here, and it's difficult to really see because they didn't really come down that much. This one from here at this peak, that came down much further, and so this is where we're going to mark our resistance level. Okay, so the next level of support or resistance right here. Okay, and then price pushes up, breaks through the level, and continues higher up. All right, so we have another small reaction level right here. And it's not enough to me. It's not obvious enough. It didn't have much of a move here, like this one had more of a reaction, or this one here, more reaction, larger, right? Okay, so price pushes up, comes to this new point, and we have a new level painted right there. All right, so price comes back down, and what happens? Our previous level of support or resistance at 29.52 gets touched right here, barely gets touched. And I was actually in a lot of these trades, and you're going to be able to see that when I open up the trade history. You can see that most of these trades are buy trades, where I'm entering at key levels of support and resistance, and entered a lot of trades right, or a few trades right at this 29.52 level, and was able to come out with some good profit. All right, so you can see there that this was a very key level, and price used it as a support. Resistance turns into support and bounces up and makes a huge move back up to the 31.42 level, and it breaks it this time. And then the next major high or resistance point is 34.25. Okay, so we're going to continue to make our way. All right, so we pull down, and the next major level that I see is right here. You can see that there was a small reaction right here, but again, not enough. We want the bigger move, and it shows from here all the way back up to here. So these 2 points. All right, so retest of the high, failed to break, comes back down, and this support breaks through finally and goes to this one, the 31.42. And I actually entered trades at that level as well, because that is a major level of resistance that previously had a nice reaction, breaks through it, comes back, makes a new high, comes back down, breaks the 32.38, and then finds the major support level, or makes that major support level based on a previous resistance. Okay, so that is where price is currently. And if we go down to the 4 hour, so after I draw my support and resistance on the daily, I go down to the 4 hour to see if there's anything that I've missed. But in most cases, I can use just the daily support and resistance levels, and my job is done. Because as long as price is within the range of the support and resistance levels that I've drawn, so from 23.64 all the way to 34.25, and if it goes anywhere in there, I'll have an idea or a roadmap of where to enter positions after a potential pullback. So now I have to wait for price to have a pullback either at the opening of this week, maybe it will go back to 34.25 and have a substantial pullback to one of these levels, 32.38 or 31.42. Manual trading takes some patience. It's important to wait a few days, maybe even a week, for that right trade setup, because it will produce potentially a lot of profit. And I've had some huge months because of waiting for the correct trade setups. For example, in April of this year, I came out with 44% profit. Doing just this, waiting for the right opportunity to give me that really great trade setup to produce a lot of potential profit. All right, so let's go down to the H4 and then kind of show you what this looks like. All right, so we've marked all these levels on the daily. And you can see this is, again, the 31.42 level, which bounced, had a nice bounce off of, went to the 32.38, came back down, and then continued back up from there. So this would have been a really great trade. And I did take positions here, and I'm going to show you them right now. So trade history, you can see my trade one was entered right here off of the possibility that 32.38 could have another reaction based on coming down from here, reacting here, coming back up, coming back down here, looking for that possible bounce. It didn't take place. I went in with lower risk and then price came down to the 31.42. I was ready and entered, and you can see my two trades that produced me around 5% or 6% profit. So trade 1, trade 2, trade 3, exit for a profit of around 5 to 6%. All right, so price, I saw price pushing up, failed to come here, entered another trade right here, and then a second trade again, looking to capitalize on that move, as I saw 31.42 being probably the bottom line of the pullback on gold, since that 31.42 level was so strong and powerful, shown on the daily chart. Now, one thing that you should be really looking at is the support and resistance levels, when a resistance level may turn into support. And that's usually happens when the trend is on the upside. And that has been the case. So a lot of banks and institutions are looking for resistance levels that are major and substantial being turned into a support. And this is the most significant or obvious level of resistance for gold for keeping its trend on the upside. All right, guys, that's pretty much what I wanted to share with you. And this is how I've been able to produce these crazy numbers of 181% profit, trading mostly gold, using support and resistance. We're drawing on the daily chart, checking on the H4 to see if maybe I missed something. Maybe there's a level that's possibly there. And you can kind of see some of these levels on the H4, so that I might add. So this one right here, where price jumps down here, comes back up, comes back down, retests it a few times. And you can see that level of support is possibly there. And it also touched at this point. It failed at this point. It did have a little bit of a push back up. But what you can see here is even on Friday, where price pushed up, made a high here, but came back down into that 4-hour support level, so 32.86. And so these are the levels that take a little bit more refinement, because the lower the time frame that you go beyond the H4 or the daily, the harder it is to start to see support and resistance, because there's a lot of market noise at that point. All right, so that's why drawing your support and resistance on the daily is the easiest thing to do. And once you have that down, it gives you a roadmap for potentially weeks to come, as long as price is staying within the group of support and resistance that you've written. Trading like this on gold is actually pretty simple. It doesn't take a lot of discretion. You just mark your levels of support and resistance on the daily and sometimes the H4, and you look for pullbacks, for it to pull back a little bit into one of these levels and then enter a long position. I have a really easy risk management strategy where I use 0.01 lots for every $1,000 of balance. So if I have 33,000, that means I'm going to be using 0.33 lots on each of my trades, and no more than that. Sometimes I'll risk less depending on if it's not a very strong support level or resistance level. So using this risk management strategy has been an important part of my trading. It can easily gain you 5, 15, 20% each month by using this strategy on gold. Anyway, thanks everybody so much for watching. Catch you on the next one.